As you may know, the United States is basically the only country that taxes its citizens globally, no matter where they live or where their income is from. Everybody else, on the other hand, can usually just deregister from their home country and will automatically be considered a non-resident for tax purposes, often without even needing to show or prove where they're moving to. As long as they live in a tax-free or territorial tax country or do not trigger tax liability anywhere else in the world, they can live and operate 100% tax-free and benefit from drastically increased freedom, like no reporting requirements. Operating tax-free is definitely one of the biggest competitive edges out there, in particular for entrepreneurs. Especially now, with a rising amount of people working location independent, the number of people that leave their home country and set up shop somewhere else to benefit from massively better circumstances is at an all-time high. This naturally bears the question, what about Americans? Can they benefit from any offshore tax reductions? The answer is yes. While limited, U.S. citizens also have possibilities to optimize internationally when it comes to taxes. In theory, one of the best options for Americans is simply to move to Puerto Rico, if you're willing to live there. Puerto Rico is bar none the tax paradise for Americans. As a U.S. citizen, you will qualify for Act 60, previously known as Act 20 and 22. You'll be able to get down to 4% corporate tax, as well as 0% on dividends and capital gains income. If, however, you are not willing to move to Puerto Rico, then the next question arises. Are you willing to move overseas? If yes, then you can make use of the Foreign Earned Income Exclusion. It allows you to exclude $112,000 for 2022 plus deductions on top, if you can spend 330 days per year outside of the United States and physically on the soil of other countries. Basically, the Foreign Earned Income Exclusion removes all the income tax for state, federal, and city if you're in that low six-figure range. What's left is Social Security and Medicare. However, this can be removed too if you operate through or work for an offshore company, rather than a US-based one. What if you would like to stay in the US though and not relocate abroad? Since you can't reduce your personal tax rate, if you continue to live in the US, the question arises, can you operate an offshore company from home, perhaps in a place with no taxes? Well, yes, but can it help you save taxes? The answer is yes, potentially, if you can have non-US trade or business, or can separate your foreign business from your US operations. This is primarily dependent on the so-called CFC, Controlled Foreign Corporation rules. For Americans in particular, something called GILTI tax. GILTI stands for Global Intangible Low-Taxed Income. GILTI tax is applied to any U.S. person or entity who owns at least a 10% share in a foreign company, which is primarily managed and controlled from within the U.S. You'll owe this tax even if your offshore company didn't make any of the turnover in the U.S., and even if you haven't repatriated any of the money back to the U.S. GILTI tax rate is 21%, and thus equal to the U.S. corporate tax rate. However, if the offshore company is owned by a U.S. corporation, you will get a 50% deduction, which will result in a 10.5% effective tax rate. On top of that, you might get better write-offs abroad. The best structure usually is that the foreign company is owned by a U.S. C Corp. In that case, you can, under IRC Section 245A, bring the already taxed money back to the U.S. tax-free. This is a great scenario and essentially reduces your corporate tax rate down to 10.5%, which is certainly much less than what you would pay in the US, especially considering state taxes as well. What would be the best country to incorporate if you want to make use of this structure? In the best case scenario, the jurisdiction would offer three things: 0 or close to 0% taxes, possibility to build and prove economic substance if needed, and good banking. These three things are generally not easy to get nowadays and exclude a lot of commonly recommended options. Generally speaking, one of the best options in most scenarios is UAE. Cyprus, Hong Kong, or Labuan could also be interesting jurisdictions, but it really depends on the nature of your business and customers. It could also be achieved through a territorial or remittance-based system if you can get around withholding tax. Okay, so lastly, what if you want to pay absolutely no taxes though, especially on a personal level? Then you have no choice. You will have to renounce your US citizenship. This can not only help you lower your taxes, but will also increase your global freedom drastically. Please don't forget, there's a lot of nuances to the strategies discussed in this video, and they should not be taken as legal advice. Always double-check with a professional. If you're interested in learning more and finding the optimal solution tailored to your needs, don't hesitate to contact us. You can find a link to work with us in the description. Also, please like and subscribe for more informational content about international tax, asset protection, passports, residencies, and more. See you in the next video!